Welcome to today's What Will Move the Market show. I'm your host Prem. It's Monday, November 3rd, 2025, and here is everything you need to know as the markets open for today. Wall Street wrapped up Friday's session and the month of October on a positive note, with all three major indices posting gains. The Dow Jones Industrial Average closed at 47,563, adding 41 points or just under 0.1%. The S&P 500 advanced to 6,840, gaining 0.26%, while the Nasdaq Composite led the rally, climbing 0.61% to close at 23,725. The star of the show was Amazon, which surged nearly 11% after reporting its fastest cloud computing revenue growth since 2022. The retail giant's robust earnings forecast calmed investor nerves about returns on massive AI investments. Apple also provided an upbeat outlook for the holiday quarter, though supply chain constraints remain a concern. Palantir and Oracle gained on continued AI optimism, while Netflix rallied nearly 3%, following its 10-for-1 stock split announcement. Energy stocks were mixed, with Chevron rising on stronger earnings while ExxonMobil slipped after reporting a profit decline. October proved exceptional for Wall Street, with the S&P 500 gaining 2.3%, the Nasdaq surging 4.7%, and the Dow adding 2.5%. This marks the longest monthly winning streak since 2018 for major indices. The Federal Reserve delivered a hawkish 25 basis point rate cut during the month, with Chair Jerome Powell signaling potential caution on further easing. Meanwhile, improving US-China trade relations and strong earnings from tech giants provided additional support to the rally. Indian ADRs closed mostly low on Friday as banking heavyweights faced pressure. HDFC Bank led the decliners, down 1.79% to close at $36.22. ICICI Bank fell 1.4% to $30.30. Infosys slipped 0.42% to $16.57, while Reliance Industries remained flat at $58. The weakness in Indian ADRs, particularly in banking stocks, signals cautious sentiment heading into Monday's session. Investors should watch for potential profit booking in financial services stocks as domestic markets open today. Asian markets are trading mixed this Monday morning. Japan's markets remain closed for a public holiday, while South Korea's Kospi has opened over 1% higher. Australia's ASX 200 is down 0.4% as the Reserve Bank of Australia begins its two-day monetary policy meeting. Hong Kong's Hang Seng is expected to open slightly lower, trading near 25,975 in futures. Investors across Asia are closely monitoring China's manufacturing PMI data expected later today. Analysts anticipate a reading of 50.9 for October, slightly below September's 51.2. China's official manufacturing PMI already showed contraction at 49, marking the lowest level in 6 months. GIFT Nifty is indicating a gap-down opening for Indian markets, trading around 25,822 as of early morning. This suggests a negative start of approximately 80 points from Friday's close, pointing to continued consolidation after the recent 4-week rally. The cautious overseas sentiment and profit booking in banking stocks are weighing on pre-market indicators. The ongoing US government shutdown continues to impact economic data releases, with several key reports delayed, including trade balance and jobless claims. Despite this, the Federal Reserve will release minutes from its recent meeting later this week, where policymakers cut rates by 25 basis points, while signaling potential pause in further easing. On the positive front, easing US-China trade tensions remain supportive for global markets. Presidents Trump and Xi reached preliminary agreements that have calmed fears of escalating trade wars. China has agreed to resume purchases of US energy products, including potential large-scale oil and gas deals from Alaska. Oil prices remain relatively stable, with Brent crude around $65 per barrel and WTI crude near $61, both showing modest gains. The softer crude prices are positive for India's import bill and inflation outlook. However, OPEC Plus is set to increase production by 137,000 barrels per day in December, which could keep prices under pressure. Indian markets snapped their 4-week winning streak on Friday, with the Nifty 50 closing at 25,722, down 0.6%, while the Sensex settled at 83,939, losing 0.55%. Bank Nifty fell 0.44% to 57,776. Foreign institutional investors have shown signs of turning net buyers in October after months of relentless selling, with over 3,000 crore rupees flowing into Indian equities in recent sessions. This reversal in FII sentiment could provide crucial support to markets going forward. Several IPO listings are scheduled for today. Jayesh Logistics is set to list on the NSE SME platform, while major upcoming IPOs include Lenskart Solutions and Grow, which are expected to generate significant retail interest in the coming days. The Reserve Bank of India's recent upward revision of GDP growth forecast signals confidence in domestic momentum. With inflation below target, potential rate cuts could further support market sentiment, though the RBI is likely to maintain a cautious stance given global uncertainties. From a technical standpoint, the Nifty 50 has formed a bearish double-top pattern on daily charts, with a rejection candle on the weekly time frame, indicating caution in the near term. For today's session, immediate support for Nifty is positioned at 25,700, followed by stronger support at 25,650 and 25,500. A breakdown below 25,620 on a 15-minute closing basis could trigger further downside toward 25,500 levels. On the upside, Nifty faces immediate resistance at 25,800, with further barriers at 25,850 and 26,000. A decisive breakout above 25,850 could trap call writers and trigger short covering toward the psychological 26,000 mark. Bank Nifty's technical setup also shows caution, with immediate support at 57,480, followed by 57,340. The psychological 58,000 level acts as critical resistance. Traders should watch for price action around these key levels to determine intraday direction. Overall, the indices are likely to remain range-bound with a slightly negative bias unless key support zones hold firmly. In the commodity space, crude oil prices are showing modest stability. Brent crude is trading around $65 per barrel, while WTI crude hovers near $61. The softer crude prices are beneficial for India's import-dependent economy and help ease inflationary pressures. Gold prices in India remain elevated at around 1,23,000 rupees per 10 grams for 24-karat gold, showing no change from the previous session. Silver is trading at 1,52,000 rupees per kilogram domestically. The precious metals have held steady after recent volatility, with international gold prices hovering near $4,000 per ounce. Base metals are trading mixed on global exchanges, as manufacturing data from China remains in focus. For today's session, traders should adopt a cautious approach, given the gap-down opening indicated by GIFT Nifty. The key action zones are below 25,620 for shorts and above 25,743 for longs. Avoid chasing trades in the 25,670 to 25,743 zone, as this represents a tricky area with limited risk-reward. After a strong 4-week rally, some consolidation and profit booking is healthy for the market. Use any weakness to accumulate quality stocks in sectors showing resilience, particularly PSU banks, which outperformed on Friday, and IT stocks that could benefit from a stable dollar and improving US-China relations. Banking heavyweights may face near-term pressure, so selective stock picking will be crucial. Keep position sizes moderate and use strict stop losses given the technical setup showing double top patterns on key indices. The broader trend remains positive as long as Nifty holds above the 25,500 to 25,400 support zone, so use dips as buying opportunities for medium-term positions. That's your complete market wrap for this Monday morning. Stay tuned for the evening wrap and send in your questions. Trade smart, stay informed and make this Monday count.